everyone, and welcome to a new episode of T-Minus Podcast. Today we have Aly. He is a managing partner at Blockchain Founders Fund. It's a very well-known venture capital investment firm, very, very strong in blockchain. So, well, thank you very much for being here today, Aly.
Thanks so much for having me, Marco.
Fantastic. Would you like maybe to introduce a bit yourself?
Yeah, absolutely. Happy to. So as mentioned, my name is Aly Madhavji. I'm the managing partner at Blockchain Founders Fund. We invest in and help venture build top tier startups. We recently crossed our 100th startup over the last in the Web3 space. So we've got quite a lot of breadth and depth across this industry. And probably some of the key things that differentiate us is we tend to be extremely hands-on with our companies, helping them to sort of knock off major sort of barriers and roadblocks for our founders. And and we've also supported organizations like the United Nations. So we helped put together one of the flagship internal reports to the United Nations on blockchain and crypto. And then we've also trained a number of professors at INSEAD. So we put together the first case study on Binance with CZ. We did something similar with So Rare and many other sort of really cool organizations that helps provide a lot of like insights and learnings to future leaders, and students around the world. And we've got a lot of really great backers as part of our fund, right? And so a big part of this is, trying to change the way that the world works and help founders make and us, helping them make their visions a reality.
That's fantastic. So, does your fund has like a specific investment thesis, or you're just very open on anything happening in Web3?
Yeah, so we approach this quite differently, right? So the way we look at it is we want to solve all of the biggest problems in this industry, and that means and includes all of these sub-industries that sort of cover all of this different landscape, right? And so we're actually very opportunistic. We've got probably about 25 open sub-thesis where we're looking for companies on. But then we also get, more than 500 companies right now a month that share, what they're working on with us. And we go through that. We go through every single one of those. We try to understand what they're building. And if we come across something that we're not aware of and we think is a founder solving an interesting problem, like we're happy to sort of dive deeper into it and fund those. And so one of the other unique things, and I know this is frustrating as a former founder myself, but one thing that's always frustrating for founders is also getting ghosted by a lot of VCs, always hitting sort of roadblocks and sort of, with VCs. And so what we try to do is actually, we do respond to, cold outreaches even from founders all the time. We do actually spend time. Our goal is to respond to every single founder that shares information with us. And we get it, right? It's not easy. And we have a lot of respect for founders that are out there grinding 24/7 to build incredible businesses.
That's good. Yeah. For the conversation I've had until now, I see two different approaches from VC. There are some VCs that are very hands-on and really want to help founders, achieving their dreams and scaling a company, which is probably like the most challenging part of the whole journey. And just others that instead they're probably sort of some like angel investors. They just give you the money and, well, let's see you maybe in 6 months. Why maybe do you think some projects, mainly some VC, doesn't really interact with founders that much?
I mean, I think it's a bit of a, it's a give and take, right? And so one of the things that most VCs want, or many VCs, many angels want, is they actually want to help, right? Like they want to help founders. Many of VCs or angels have been founders or have started businesses. They've gone through the challenges. They want to help mentor some of these founders. And oftentimes this gets masked with just being too busy, right? There's a lot of different things on everyone's plate, whether personal or professional. And that sometimes just from a prioritization standpoint gets very difficult for the VC or the angel to then invest the time and prioritize their founders. And so we've seen that as a complaint from a lot of founders about, other VCs. we've been fortunate enough that our feedback from our founders has been extremely positive, and generally, they say that we're among, if not the best, the first or second sort of best in terms of helping drive value, for their companies. And I think that's quite important because we look at it as, not only, the capital, but it's how do we go help drive customers here? How do we go help drive and build like personas and refine the funnel? And how do we go help bring other potential great investors into this and help sort of expand that scope and that network, among many other things. We even sort of get involved across, understanding tech side and making sure that we can get them in front of and get feedback on what they're building very effectively, right? We've actually built a private, we call the BFF Global Expert Network. It's a private network that we run. We've got about 330 members. It includes everything from Fortune 500 senior execs to fund managers to successful entrepreneurs, some of them with multi-billion-dollar exits. And this actually creates a, great access for our founders to be able to connect with any of these people with one click. And so this is very, very impactful. So it's these types of things I think help open up a lot of doors, drive pilots and POCs at earlier stages, and then revenues at sort of later stages. So we're very conscious of that. I think the other part of it is oftentimes founders go get strategic investors, so angel investors or, well-known funds, but then don't utilize them well. So this is also a challenge because a lot of founders will go get those strategic investors and then haven't figured out how do you maximize the benefit to the company by leveraging those investors. And so this is also a part where a lot of investors will also complain that the founders don't reach out to them or the founders don't ask for help. And so being able to streamline this, because you also can't get on a call with every single investor. I mean, it's going to be a very inefficient use of time. And so we help our companies to actually streamline this and maximize this. And so typically we work on different processes with our founders as part of, driving value here, but also making sure that we can activate, the rest of the investor group to be driving more value to these companies as well.
Yeah, for sure. It seems as it's basically one additional selling point for a VC in the sense, if I'm building a company and I know that maybe you really need help in a specific sector or just to hire people, I would rather have you on board in my in my investment run instead of maybe another VC that they're not maybe they're well known for the capital they invest, but they're not really helping during the journey.
So I agree. It can be a bit of a double-edged sword as well, right? So with us, our approach is we're hyper founder friendly, and that's makes it very easy for founders to work with us, right? Like founders never need to be worried about what they share with us or like they haven't thought through something and they want to ask something very quickly and sort of get some feedback. They don't have to worry with us. Whereas like you'll also find the flip side of there are some investors that are very active, but can be very destructive to a company, right? And that you also got to be very careful of because that can actually damage a business very significantly at an early stage when it's more fragile. And you oftentimes do hear horror stories where investors are, basically creating a lot more work and problems by being active than they are solving, right? And that's never good for an early stage company.
Yeah, absolutely. Probably one of the reasons you invest in a company is the team. Team has to be strong, And if you want to replace yourself, to the team that is already there, it's probably not it's not a good deal. It's like when you are investing in early stages, maybe in pre-seed and seed, you often just value the team because there isn't really a product. What's kind of the step you take, and how maybe you can quantify or value the team?
Yeah, it's a good question. I mean, we do go beyond that, right? So, I mean, we have about 90 different things that we look at. In some cases, we can't answer all of those questions. You're right. If the product hasn't launched, there's different things that we need to look at. If there's indications of like betas or alphas, we generally want to take a look and get under the hood on that. We do want to see that our founders generally have experience in the area that they're building. Not always, but if it's transferable, that also works. But we do want to see that they know what they're building. They understand the problem, that they understand what it takes. They understand the economics behind it. We generally do take a look, pretty in depth, even at like, for example, financial projections. And we want to, less so, we don't really care about the numbers per se on the projections of, a big number at the bottom, at the end. Like, that's not the objective. It's more around understanding the assumptions and, does the team understand like all the different levers, all the different things that are involved in this business from a numbers perspective? Because that's going to be very critical to even ensuring from a numbers perspective, this business can work, right? And the margins can work. And it obviously depends on the type of business, et cetera, right? So, we look at all of those things. We want to generally even understand things like, how long has the team worked together? Did they just come together? What are the risks around this? And we've invested in teams that have just come together or even have never met in person during COVID. And that's okay for us. But we generally want to understand the risk around these factors, right? And so those are like some of the things that we're looking at, but we're also trying to understand like the problem. If they talk to any customers, do they have any potential signups or any potential like angle where we're pretty clear that this is going to be used by customers and actually solves a problem for customers? How much do they value that, or how painful is that problem, et cetera?
Absolutely, yeah. When you look at maybe an investment, a company that you might invest in, is there a specific, I don't know, it might be some numbers or a specific characteristic from the founders or the market that you're looking at, in the sense that if it's not there, it's not even worth to consider it?
Not necessarily. Like, I think that there are a lot of unique cases with companies, right? I mean, we've literally invested in companies for industries that didn't exist yet, right? I mean, like I'll give you an example. Like when we started investing in blockchain gaming, it was 2018, right? And when we talked to others about blockchain gaming, and we tried to actually bring in a number of investors on a deal that we did in 2018 called Splinterlands, which is now one of the largest blockchain games in the world. And the comments that we got from people were like from major investors, some of the biggest funds in the industry. I'm not going to name them, but the comments were, "This is weird. It doesn't make sense. Why blockchain gaming?" Like, they just didn't understand it. And so these are like industries that don't fully exist yet. And there's a lot of these sort of sub industries in the Web3 world that have emerged, right? Even with one of our other companies, Altered State Machine, it's around, leading the forefront of sort of artificial intelligence and Web3, right? And even with something like that, like when we first came in, we're on the founding cap table. People just didn't get it. We would talk to people about this and they were like, it doesn't make sense. Like, why would you need artificial intelligence in Web3? And we're like, there's unlimited possibilities. And here's a bunch of things in the roadmap. And it was just too far fetched, I think, until they start seeing certain things. And so, we're open to all sorts of things as long as it's solving, key problems in the industry. And, the founders are bold and, excited and passionate about what they're building. I mean, we're pretty flexible on that. We do know other funds that'll, cut things off that maybe like there's no market leader yet, or like they can't see in market size. And like, we don't care because we know that oftentimes things are going to create that industry or create that sub industry in this space. And we're happy to sort of take bets on, just incredible founders that are trying to change the world. Yeah,
that's true. Altered State Machine is a sick process. It's a sick project. I've tried. Yeah, really crazy. Same that you say, Splinterlands probably in 2018 didn't make absolutely any sense. So you're probably like living 2-3 years in the future. Like you're trying to find the problems that you're gonna have in 2-3 years. How you kind of address that? Like, how do you tackle that?
I mean, oftentimes there are problems that are there now and that have existed for a long time and we haven't seen someone solve them, or they could be problems that are sort of emerging in the future, right? So I'll give you some examples on both of them. So for example, one problem that we identified several years ago, and we've struggled to find good companies. And so this is one of our open sub thesis. Now we've actually just backed a company in this area. But everyone in the crypto world that owns any digital assets that's not held under an institutional custodian is going to lose their assets when they die, right? They're not going to send it to their loved ones. There's no will and trust solutions, like just lost. Most people probably haven't given their, how to access the stuff to their spouses or loved ones or any of that sort of thing. And so this is a very interesting problem, right? And we believe that there needs to be a Web3 native solution. We don't think it's, hey, there's a lawyer that, can escrow something. Like, it's not going to work like this. And so this is a solution for years that we've been interested in, right? And recently we backed a company called Lightbeam that's working on a lot of really cool stuff around will and trust solutions on chain. So like, this is an example of, a problem that's existed. It's a massive problem. Basically, everybody in this industry has this problem, and it's just unsolved. And in fact, generally not even talked about, right? I'll give you another example of an issue that we sort of see coming, right? In the gaming space, right? If you take sort of Web3 gaming, these user experiences are often very challenged because of the requirement for gas fees, right? So every time where the user needs to do something, it sort of pops up. They've got to sort of click to sort of approve gas fees. I mean, this is not fun from a user experience perspective, right? It's very destructive. It's not a great funnel. And so we actually do believe that likely there's going to be gasless blockchains that have a big shot at winning the entire gaming market for blockchain, right? And if it's going to be gas-based blockchains, there are going to be features where the developers can pay the gas fees and it doesn't impact the user experience, right? And so we think that this is quite important. And so these are the types of things where, right now, or at least in the last year, when you've had a lot of JPEGs or things, NFTs sold for $10,000 or a little video sold for like $5,000, sure, like, microtransactions and gas fees aren't that big of a deal, right? I mean, paying $10, $20, $100 of gas fees on a $5,000 purchase, nobody cares. But if you're talking about a $1 purchase or a 10-cent purchase, you can no longer do that. And so now we need to actually be able to process millions and millions or billions of transactions. And we think this is very critical, right? Even in gaming, we see the emergence of rental markets becoming a very big deal. And actually, Splinterlands is one of the pioneers of rental markets and NFTs. And most people don't realize that even today, they're doing 4 million rentals of NFTs successfully, right? It's crazy numbers. And if you were on a gas-based blockchain, this wouldn't work. Like, you can't be paying on Ethereum. I mean, how much would that cost you? 4 million transactions today for just rentals, right? And so these are like big problems that people aren't tackling always. And some founders are. And like, we're very interested in solving these wider, large problems that we think are going to become much bigger as people realize that microtransactions and user experience are critical as part of onboarding the next billion people into crypto.
Absolutely. Yeah. It seems to me it's always a recurring topic that user interface, user experience is horrible in crypto in general. And in games is probably even worse. Like, gaming is supposed to be like, you just go there 5 minutes, 1 hour, just want to relax and not think about anything. And then you go there, you open your MetaMask, you need to do a transaction, and you need Ethereum. So you go on Binance, you send it to MetaMask. It's a mess. Yeah, it's absolutely crazy. And yeah, I can see the point of having like a gasless blockchain where maybe the developer, the people that are building projects on it, are actually covering for the fees on their projects, and they can maybe charge their users in a different way. Different way,
exactly, right? Like, there's different mechanisms, but we need to clean up these aspects, and it's very critical that we solve this, or it just won't work for the average person.
Yeah. Do you see like a specific blockchain that is maybe out right now that might pivot to a system like that, or would be a new infrastructure, a new layer one?
I mean, we'll see, right? I mean, for example, right now, Splinterlands, we're built on Hive, right? And that allows us to do billions of transactions a year. And that is very important and very critical. And, we probably have the smoothest onboarding experience and user experience, I think, out there out of the games that we've seen. but I'm sure there'll be others that come up. I think it's about streamlining smart contract activity on the layer one, right? Because if you have too much computational requirements on layer one, you just won't be able to process enough. So there's different aspects like this that sort of need to be solved. But, we do expect probably some new layer ones to make a very big dent in this market. And I know there's many new layer ones being funded right now as well that, maybe some of them will sort of look at this market. And we want someone to solve these problems, right? I mean, this is the only way this industry moves forward.
Yeah. Do you have a specific subsector you are excited about?
Yeah, I mean, we're invested across the board. I mean, we're always generally more excited about just incredible founders solving, different problems. So I mentioned like wills and trusts. I mean, there's some really cool tooling stuff that we're looking at. I mean, and that we've backed recently. I mean, there's, really cool stuff on everything from like decentralized multi-chain derivatives exchanges to, in the gaming space, we're still quite interested. We do think that gaming has massive potential, to be as big or bigger than, free to play was for the gaming industry. But we think there's a lot of issues, right? I think that most of these games aren't fun, and these aren't the games mostly that are going to survive. Like the vast majority of these are going to be gone. And, I think coming back with solutions that are hyper user centric I think are very important here. I think there's challenges like we were talking about, like microtransactions need to be resolved in some of these things, et cetera. But there is some interesting aspects to gaming that we're excited about. And there are some really cool companies that we've backed. We're even interested in things like no code gaming. So we have a company that's working on connecting any NFT and being able to create a game in 5 minutes. Really, really cool solution, right? And we think these are the types of things that are going to help sort of make this go more mainstream. But then we've even got solutions that, use blockchain to solve key problems in industries, but they're not token related. Like I'll give you an example. I mean, for example, we have a company called BeatDApp that's solving the problem between reported plays and actual plays from streaming services like Spotify, Apple Music to records and labels like Universal. And this is a massive problem. It's a massive multi-party trust issue that blockchain is perfect to solve. But it's not token related, right? But these are things that are going to transform society as we know it, that I think oftentimes get forgotten about because there's a lot less hype with these types of solutions, right?
Yeah, probably people don't like infrastructure, but you need some sort of infrastructure before building proper games on top.
Absolutely.
I've seen, like, as you mentioned, there are a few companies that are trying to build platforms to create game in a very easy way without needing of coding. And at the end, as you mentioned, the game needs to be fun. Crypto games at the moment, they're very, very little are fun.
Vast majority are, no, you're right.
Mm-hmm. It's probably, the thing is, like, probably takes several years before a proper game comes out. So do you see maybe I see some of the also of the studio, they're building already a games, but maybe the infrastructure is not there yet. Do you think like this can be a sort of problem for some of the studio that are maybe raising and building a game right now?
I mean, there's obviously ways around certain aspects, right? So there are chains that you could use, Immutable X is popular right now, or Polygon, or Hive, of course. There are chains that you can use, and there's different pros and cons to every chain, right? So I think it's one, understanding it, two, of course, like starting to build a user base, build traction, and maybe some chains might take you far, but not all the way, right? And so maybe at some point you need to consider like a pivot down the road once you're much larger and like newer chains come out that are popular that, have other benefits specific to the gaming industry and like microtransactions that are more effective, or maybe some of these chains improve sort of their layer one, right? So I think that time will tell. Many of us probably didn't know the biggest chains 3 years ago and what they would have been. And, and many of them didn't exist necessarily. And so we probably aren't very good at predicting 3 years into the future, right? So the best way is like, make your best decision with what's available right now, but, make sure that you're building in a way where if you do need to pivot, that you have the capabilities to do it like fairly easily.
Yeah. Do you see some, like, as you mentioned, Mutable X is a very good platform for games, mainly because just remove all the friction that a gamers might have. And there seems to be a sort of war between like streaming platform, in a sense, like I saw Myria or Gala Games that are proper like studio and streaming provider, like Steam, for example, and more Immutable X that is in the back end sort of marketplace. Do you see these two kind of subgenres working together, like they can survive together, or one of these sector will kind of dominate the other?
Yeah, I mean, we'll see, right? I mean, I think there's, in reality, still a really long way to go for both of them, right? I mean, once there's like mega AAA games or hyper popular games on Immutable, like this question might change, right? And the answers might change to these. But I think like as of now, like a lot of early companies are going on it. You've got like some bigger companies looking to experiment with some of these different technologies still. But in reality, it's all very early, right? So, we're starting to see even some like larger studios consider using some of these chains. But at the end of the day, like they can reverse their decision as quick as they entered it. And so we actually need to see like major builds on there and like seeing millions of users actually go and use these products. And that'll start to solidify some of their positioning. But I think for either of these cases, I mean, like we're just a long way from determining who's going to win and how. And it could be one of those, it could be something else, right? And so we're always open to sort of looking at the data, understanding what's going on, like, what are sort of the advantages to the different solutions. And then, we even help our companies think through these oftentimes and help them decide like what are some good paths that they could be going.
True. Do you see, would it be better, let's say for you, if a gaming company enters the crypto space, or more crypto founders trying to build a game in the space?
Yeah, I mean, I think there's pros and cons both ways, but I think one of the big challenges we've seen from traditional gaming studios or large, Web 2 companies trying to go into Web 3, I mean, there's generally a very big philosophical shift that's missed, right? And I think this is important because to be a successful Web 3 company, you need to build a Web 3 company. And you're not just a Web 2 company masking as one. And there's been several that have successfully raised some money or whatever. But at the end of the day, it's about like shared economics, like trading a lot of the short-term profit that you might be getting as a Web 2 company into community-driven economics, with your user base. And like, this doesn't work if you're trying to play a short-term game of like maximizing profits. And so like this mentality we've seen is not always shifted for a lot of these Web 2 companies, and they don't get it. So I think this is actually quite important. And when you have that disconnect, it's very apparent, and it's very apparent to the users as well. So I think that's one problem. I mean, the flip side of it is if you have, crypto native individuals that have no gaming experience building a game, also not a good combination, right? I mean, building games are not easy. So, ideally you can find someone that's got obviously a mix of gaming experience and understands the Web3 or blockchain space and understands the mentality and like the differences in economics and, is willing to build around that. Because it is very critical to understand this industry and actually believe in it as part of building a solution that's going to work for the users in this industry and to expand it sort of beyond that.
Yeah. Do you think, especially when probably a Web 2 company, Web 2 founders come to Web 3, they understand what a token is, but they probably don't have the full picture on how can they use the token to, align the community. But on the other hand, we're having community members that as soon as they get the token, they sell it, if they are free airdrops or something like that. Do you think there is a sort of formula there to align everyone on the tokens?
There is ways and mechanisms to drive, like better alignment. I think that, sure, you're going to always have some people sell, right? I mean, I think that's part of this, but I think that alignment is very important. I think what we see more often than not is like when someone's coming from outside of this industry and they want to launch a token, it's generally more of a money grab or like a fundraising mechanism. And like, that's a big problem to have that mentality when you're coming into this, right? And if that's the purposes of doing it, you probably have the wrong idea, right? And it's probably not going to be sustainable. And so this is a big problem that we see. And so I think working on that alignment and understanding is critical, but a lot of it is philosophical. It's not necessarily something that's fully like you can teach, I would say, to an entire extent, right? So I think that's sort of one part of it. I think that aligning your community is just as important as aligning your founders and aligning like the entire system and how deeply integrated this is with the economics and the long-term success of this entire ecosystem. And, if the founders are dumping or early investors are dumping, I mean, of course, it's not great signals for your community either, right? So like all of this needs to be in tandem and obviously, part of building this ecosystem and that alignment is very critical.
For sure. Is your idea that, for example, for tokens, very often they're just, maybe they're a governance token or just the tokens doesn't really do much in the ecosystem. Something is changing in games because maybe you have different things where you can put your tokens and spend it, etc. But in many, let's say, for example, DeFi protocols, the token doesn't really do much. Do you see any kind of ways to give more importance to the token? Because very often you get the investors in the equity of the company that do very well. Tokens maybe do well in the beginning, but in the long run, at least it seems, for example, in the DeFi after a few years doesn't really perform well because it doesn't really give you any, for example, portion of the fees or something like that.
I mean, I think there's entirely different mechanisms that can be built, right? And there's different ways to do this. I think that you're right. One of the challenges with DeFi has been the real only incentive oftentimes to have the token is to stake it so they give you more of the token. So it's basically like, hey, don't sell 100 tokens, I'll give you 100 more. And then it's don't sell 200 tokens, I'll give you 200 more. And then it's don't sell 400 tokens, I'll give you 400 more. And this is a huge problem, right? That is not a sustainable mechanism, as you can very quickly tell, because basically the only thing you have to do with the token at some point is dump it. And now instead of dumping a small amount, you're dumping a much larger amount because they just gave you 3 times more, 5 times more, et cetera, right? And so this is a big issue that we're seeing with a lot of DeFi projects. And we're seeing this in the token economics of a lot of projects. Like, in our opinion, staking is not a sort of foolproof mechanism. It's a very short-term mechanism that has a lot of flaws. And so when you are doing staking, it needs to be very clear on like why you're using this. And this needs to be paired with a lot of other mechanisms as part of the solution, right? So this is definitely, I think, important to dive into for a lot of founders and understand like, how is there real utility? How does this intertwine with business metrics? And how is there a ton of sinks that sort of absorbs all of that stuff that, you've got the faucets turned on where you're giving out tokens. Where are those sinks in place and how are they actually draining tokens out of that system?
Absolutely. Yes. I see many projects, they just put on the, what your token can do, you can stake it and you get more tokens. Yeah. I really don't see why, I understand, for example, Ethereum, you stake your token, you validate the chain. Solana, same, if it's a layer 1 or if it's a protocol in general, you stake to secure the network or the protocol. But for many of the DeFi projects, gaming projects, just many projects in general, this token doesn't really have a use. There is no reason to have this token. Would you maybe consider a company, maybe you have still a Web3 company that at the beginning only launches their project without a token, and maybe they only sell equity and in further rounds or just farther down the road, they decide if there is a reason to create a token.
Yeah, so I mean, we've definitely seen a lot of this. We actually, in a lot of cases, do prefer it. So we do invest on equity and tokens. And generally, we do believe that, a token is not there to fix or mask an issue in the economics or experience of a user. So if you take like a game, right? People shouldn't be playing this game because the game is not very good, but they're playing it because they make money from it. Like, this doesn't work, right? What we want to get right is all of those traditional Web 2 components, right? So we want to make sure that the game is sticky, that the retention's there, that you fix part of your funnel, and like you have those aspects there. And then the tokens coming in and amplifying all of this, so that's where you're going to get the real, 10x or 100xing in your user base, because all those fundamentals are still right. And a lot of Web3 companies don't get this, right? And so they actually have broken processes, broken sort of backends in this way, in the way that I'm sort of referring to it. And they're getting masked by this token being there, right? And so you're seeing like user growth, but those users aren't there for the right reasons, right? And they're not going to stay there. And so this is actually a very big problem in a lot of Web3 companies, not just in the gaming space, but all across this industry.
Yeah. Would you maybe consider, like, as an advice to founders that maybe come to you with a pitch deck, the idea seems interesting in my works, but the token kind of ruin everything, just to tell them, look, guys, we might invest in you, but you need to remove the token?
100%. This actually happens fairly often. And I think what founders usually don't realize, especially in a bull market, now I think founders are starting to get it in a bear market, but the way that we look at it is a token can be very positive in a bull market, right? In a lot of cases, because you sort of get that exponential sort of, external increase in the token that's sort of, masking some stuff, but doing really well on driving certain aspects in the game or product. The problem is, in a bear market, your token is likely to be falling, right? And so when it's falling, it has the negative side of that, which is then exponential decrease in value, right? And so while you get the upside of this exponential increase when the market's good, you get the exponential decrease when it's bad. And it's furthermore, I think what's different about this industry. So if you take like a Web 2, like juggernaut, like, I don't know, let's take Apple, right? So if you take like a traditional company like Apple and you own an iPhone, right? If Apple's stock goes down, you don't care, right? You're an iPhone user, right? But now in the crypto world, you're a user of the product. So you might actually be using their product, but you also hold their token. And so you're kind of like a shareholder. Not exactly, but you're financially aligned to the success of that project. And so when it's going down, you're going to complain about it. If it goes down a lot, you're going to complain about it a lot. And so now you go from being this very positive user that's saying a lot of positive things about it to being a very negative user saying a lot of negative things about this, right? Because and this sort of creates that like negative downward spiral dive. And that's why you see so many crypto companies die so fast, I think, in bear markets, because you get their entire user base being financially aligned and very frustrated. And oftentimes it's paired with like a lack of communication and transparency and like these aspects, because that'll ease some of those concerns. But if you're missing all of that, then people get very frustrated very quickly.
Yeah, I can see that. I see many games, we're partying, and in general, many projects. You see in the bull market, Discord is thriving. Everyone wants to say their opinion. Everyone wants to participate. In a bear market, not that much, no? So how maybe a company like a project in Web3 can manage to kind of solve these issues? Do you think there is maybe removing the token at all can solve the problem? Or is there maybe some other way?
I mean, I do think that a token can add a lot of value to the ecosystem and can be a big part of a solution. But I think it's very important on how they do it. How is this sort of built and thought through? And does this actually align long-term? Are the incentives of the founders even aligned with the community long-term? Like oftentimes these are issues that need to be resolved. And even when you think about like vesting periods and stuff, I mean, like if you have founders that are vesting in 18 months or 24 months, I mean, how many games, are globally successful for 2 years and the founders quit? Like, I mean, none, right? I mean, and so these sorts of things also become a big problem. We're generally a big fan of longer term vesting. I mean, if the team is passionate about building this, then they should want to be there, right? I mean, and even as investors, we're okay with longer vesting. And generally, like if the founders are aligned long term, like we want to be part of that, right? And so I think these are like some of the challenges though that are out there. But I wouldn't say it's, to necessarily not consider a token at all. I think there is very positive benefits that can come from aligning, your user base in a way that, drives, I think, exponential value, but you got to be very careful in how it's designed.
For sure. Yeah, we still need to learn how to use the token to, as you say, to boost everything that's going well in Web 2 and make it even better in Web 3. Would you, I mean, like vesting schedule is always a tricky incentive in a sense that maybe investors, usually they want to, get very short vesting schedule. Founders, they're supposed to have long vesting schedule because you hope they will be there in few years. In the same sense, like equity, when you usually invest, I believe in a project, you invest both tokens and equity, as you mentioned. Is there a line there in the sense, would you prefer to have just long vesting schedule for, both the team and investors, or is there maybe something better?
I mean, I do think it depends, right? Like, I think there's always like a part of give and take. It depends what the market's like and, how, do you have a lot of investors that are interested or could be interested, right? Like as a founder, and if I put my founder hat on, there's a lot of considerations to these things, right? And there's a lot of different levers that you can play as well. So I think, for example, aligning on vesting period is important. Like if your investors want to be dumping in the first month of the project, I mean, probably don't want their money, right? But obviously it depends on market conditions and like, do you have that flexibility and like, what options do you have? And so like, I get it from the founder perspective. It's not always that easy, right? But these are some of the considerations because generally, like if someone is looking to get out immediately, I mean, they're probably doing more damage than good to the actual project and ecosystem, right? And so, and keep in mind, like these things oftentimes get found out by the community. I mean, we've seen hundreds and hundreds of examples of the community identifying investors and calling them out. And I think it's good. I think we need actually more of that because, people should be accountable if they're going and hurting these projects and ecosystems and the community should be aware of it, right? I mean, that's a big benefit of, some of the transparency in this industry. Obviously it's pseudo anonymous. So like you've got to dig a little bit, but oftentimes it can be figured out. And I think it's important because there's a lot of investors that also just damage this industry and extract a lot of value without actually aligning with the projects, and it creates a bad rep. And you're now starting to see, I mean, I've seen countless number of projects and investors that keep track of other investors and actually have blacklists. And, these are investors that you never want to take money from. And we've seen this stuff, and it's good, right? When founders share these things, it is good for the ecosystem overall to continue to build value by, making sure that people that are aligned long term, that want to be here for the right reasons are here, and the people that don't want to be here, they shouldn't be here.
Yeah, I was having a conversation a few weeks ago with another person in VC, and she said the same things. Maybe a very big fund can maybe invest in a project and just sell the tokens when they are locked. But if you are maybe a smaller fund, you can't really do that. Otherwise, the next project won't come to you asking for money.
I mean, I think it's the same problem even for the big funds to an extent. I mean, reputation catches up. So, I mean, karma will come around, and I'm not as worried. I mean, I think this industry will and is already on the right path to sorting this out. And there's a lot of sharing happening on investors to avoid, and which investors add value and things like that. We're always fortunate, to be on that side of adding value to companies, but we also will share with our companies if we hear of investors that are negative, right? And we'll share that with our companies because it's our obligation to help our companies.
In case, for example, you invested in a project and your thesis changed, or maybe the project didn't deliver what you were thinking was going to deliver at that point, how do you kind of manage to, are you thinking to just leave it and see how it goes, or sometimes you try to find another buyer for the company?
No, I think that, when you invest in companies as early as we do, pivots are very natural. In fact, you almost expect most of the startups that we invest in are probably going to pivot, right? And they probably are going to change their business model. And there's a lot of other aspects that are going to change. I think that's a very normal part of being a startup. I think if you nail product market fit and you nail sort of without any changes, sure, that's very rare. And generally you need to be listening to your customer, taking feedback, adapting the product. And if you're not doing those things, you're more likely to die just from not being aligned with your customer base, right? And so, or your user base, right? I think that's very important. Even like DAOs. This is a big premise of DAOs, right? It's being able to listen to your community and be able to adapt to your community. That's pivoting, right? And that's adapting to your audience. And so I think these are very critical aspects to success. So I would just say it's expected.
Perfect. Yeah. That's you're right. If it's hard, maybe when you get a pitch deck or an investment, just to look at it and say, okay, that's gonna work perfectly. But you just expect the team knows what you're going through when you're building something, and they just wanna just make something successful, something that they enjoy to do. In case, for example, you have some other, does it happen that a company or a project that you invest early on completely change the business model, like maybe even the industry they're working on, to create a product that maybe will work better compared to the one they were previously planning to?
Yeah, we've definitely had companies do major pivots, completely different target customer, completely different product even. We've had some pretty significant pivots. I think it's fine though. If they identify that it's not going to work, it's better to pivot, right? At the end of the day, if you think that industry is then no longer, there's some assumptions that broke and sort of weren't reconcilable, then it makes sense to pivot, right? Or if the value wasn't there that you expected, I don't think it's a big problem.
Fantastic. Well, thank you very much for taking the time to speaking to me today.
Absolutely. My pleasure. And if you are a startup founder out there, please feel free to reach out to us, and we look forward to hearing from you.
Crazy. If people want to get in touch with you, how can they do it?
Yeah, so you can find me on LinkedIn at Aly Madhavji. You can also find me on Twitter, or feel free to sort of reach out on our website as well. We do take and look at every submission that comes in as well through our website. Perfect.
And if there was one lesson or just something that you pick up along the journey that help you in anything in life or just understanding better Web3, is there a specific suggestion you might want to leave us?
I'll share something more specific to founders, right? It's not an easy journey. You're going to have a lot of people tell you no, or that they don't believe in you. And that could be everything from family and loved ones to, investors. And at the end of the day, if you believe in what you're building and you think there's an interesting opportunity there, go for it, right? And keep building it and keep grinding and, reach out to investors that align with you and that'll understand sort of and support what you're doing. And great things happen. And we've seen it countless amount of times where investors have got it completely wrong, where, friends and family have gotten it wrong. And, that's not necessarily an indication on you or where the business is, right? So just keep at it. Well said. Perfect. So I'll speak to you soon. And yeah. Absolutely. Thanks so much, Marco.
Okay, bye.